What's going on, everyone? Welcome back to another video, another day, another dollar with your boy Chris. We're gonna be breaking it down for you guys today. We're gonna go over everything that's occurred in the last 2 days, as there's been some changes to the trading. Well, not the trade. Well, yeah, the trading week. Excuse me, English is hard. But changes throughout the trading week so far since I last posted a video on Tuesday. Last time I spoke to you guys, we were still in a balance, and then we opened up yesterday after the CPI data and came out of balance pretty good. And then today we had PPI, which in my opinion really doesn't have much effect on the market, but overall market was still trying to do what? Push up higher as we set new highs on the year. So we're going to go over everything that I discussed on Tuesday real quick. Well, and then you're going to see how I chart my 30-minute time frame using market profile type analysis. Some of you guys may just use basic support resistance, but with market profile type of technical analysis, it gets a little bit more in depth, where you can find things like 11 points of controls, price probes, afternoon pullback lows, things of that nature, things that you wouldn't normally see if you were just doing support and resistant type of analysis. And there's absolutely nothing wrong with that. However, I feel like this just for me gives me a little bit more of an in-depth bird's eye view of how the market is trading and what is most likely to occur. So let's review everything real quick. Let's look at our 30-minute chart. So as I was discussing on Tuesday, buyers, after we had closed, right? We closed with this nice, pretty price probe in M period. For those of you that don't know, each one of these 30-minute time frames is labeled. There's 13 time frames in the day. Each one is labeled A through M. I haven't been labeling them recently, but A through M. So from the start of the open all the way until the close, which is an M period, it goes A, B, C, D, E, like the alphabet. Hopefully you guys are, smart enough to know what the alphabet is. Hopefully you attended kindergarten. And yeah, so A through M, right? And then we had that big price probe or price spike in M period late Tuesday evening, going into the close. I said that we might have just stretched our daily balance because initially our daily balance was right here at 76. We only took that out by 2.5 points before closing back inside that range. I said the most positive thing for buyers is to open up above the price probe of 44.6525. If we did such a thing, then we should have no issue taking out the day's high, getting that 11 point of control, and then getting the rest of these daily highs and getting above that 4,500 level that we've been discussing for quite some time. Now, however, I was not expecting CPI data, algorithms, and short-term traders to gap the market the way they did. So they took out 1, 2, 3, 4 daily highs, right? Took out 4 daily highs, hold the gap, and I'll show you what we do with that here in just a second. But I was, that's what we were looking for. We weren't necessarily looking for the gap that we got, but overall, the analysis of holding if we held above it, the market should move higher. If we held above that 65.25 level and took out the day's high, we should have had no issue getting up. Now, when you gap above a bunch of daily highs, all those highs disappear, right? Those are price points that we traded through. They have no meaning, right? At some point, they were something to lean against for a short, but they have no meaning to me in the short term. So we're going to get rid of all these. Now you'll see I'm going to get rid of I'm not going to get rid of the 78.50 because that is where the gap will fill, right? Because we opened up above that previous day's high with pretty good move. So all the rest of these highs are gone. However, you'll also notice that I keep the 11 point of control back from the 5th of July, right? At 83.75. I will not get rid of that because we gapped above it and now becomes a downside destination. It was an upside destination. Now it is a downside destination. At some point, if we do ever come back into a balance and get into this gap, you will see us eventually trade down to 83.75, as it was a very wide point of interest in the market and on the profile from that day. So it acts as a magnet and it gives us a destination, or more or less a target to the downside whenever you have that 11 wide point of control, or any types of points of control that are over 8 wide marked on your chart. So just as we have this one down here, this 10 wide point of control at 56, if we ever get back into this day's range and we continue to push on down, your targets would be 65.25. You get through that, then your target would be 56. So having these things on your chart is extremely beneficial. But since we gapped above that day's high, we took out all these daily highs here. Those have no meaning. The only thing that does is right here where the gap fills, and we'll label that now as a gap fill. All right, so we're going to label that as a gap fill. And now that what was once going to be considered an area where we might find some type of resistance, we want to see if we find buyers there whenever we pull back to it, right? Because we gapped above it. All the people that were short here, if we ever come back into that area, they would be targeting to get out of that position. So 78.50, we want to see if we hold that now on the pullback in. Another thing would be is we broke out of this balance area, and now we'd be pulling back. If we ever did fill the gap, we'd be pulling back into that 78.50 level, and then you'd want to see as like a break and a retest, like some of you guys may hear Desi. I'm sure you guys know who he is, but you may hear him talk about a break and a retest. Well, this is an example of how a break and a retest would set up, right? We were in a balance area or an area of consolidation for a couple of days. Even on the 30-minute chart, you can see that we broke out of it. We've pushed up pretty good now. Let's see if we come back into some type of balance and then rotate lower and back test that area. Now you would want to see us hold anywhere between 78.50 and 65.25. Anywhere below that, you wouldn't want to be a buyer, because then you have downside, pretty good downside moves to 56 and 50 and then 42. And then that other 10 wide point of control at 38.25. Those act as magnets. But you would look to fill that gap and hold 78.50. We're going to keep that 83.75 there. Now we're going to mark Wednesday's low, because I haven't done my homework. Like I said, I've been grinding out, working a lot here recently. So 97. This is why I'm just doing this video, so I can show you guys how I do my homework, how I label my charts, and hopefully you're following along as well. So this is going to be the low of day. We'll mark that on our chart, right? Because that is going to be an area of significance. We'll look to see if we find buyers against that gap fill, right? So now we know where the gap is from 97 to 78.50. That reminds me, I need to label that right where the gap starts, so we know that the gap starts there. And then we have, let's see here. We have 13 time frames, right? We want to look to see if we have a wide point of control. I can see in this one area right here, just automatically marked by my my profile study, that there's a significant area here that you can see marked by this yellow line, but I want to count to make sure if it's 9 or more wide, then I will label it as such, as a 9 wide point of control. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9 time frames that traded back and forth through 45.09 level. Now you can label it here at 45.10.25, no issue, or you can label it here at 45.09. And since I don't necessarily know where half back was from that day, I'm just going to use what I think where closest to half back would have been, which is 45.09. So we're going to label this. This was once again a 10 wide or 9 wide point of control. That means 1 time frame here, 2 time frame, 3, 4, 5, 6, 7, 8, 9 time frames passed back and forth through that 45.09 to 45.10.25 level. So that's why that's an area of significance to me. So just like the one down below, this will act as a magnet, right? Or a target. 9 wide point of control. This is where, and if you can even see it on the volume, right? Bell-shaped curve here, but all the volume was done right around this 45.10 to 45.09 level. So 9Y point of control from the 12th. And we'll label that yellow. Boom. And now we have our high of day. Now, one thing you can note, and it's not valid anymore because we opened above today's high, or yesterday's high. We opened above Wednesday's high and pushed up higher. But one thing you would normally note is this double top right here at 45.16. That would be known as an afternoon rally high, not by textbook definitions. And for those of you that have been following along for a while, you know what I mean by textbook. Typically, you have single prints above or below whenever it comes to afternoon pullback lows and afternoon rally highs. But because we got to take what the market can give us, we would mark this level as a pretty significant area, 45.16, which is where change took place. That'd be kind of like a line in the sand area, and still kind of is to an extent. So if we ever pulled back to that area, you would see, or like if we had opened up in today's range and pushed up to that 45.16, you can see how we couldn't get above that late in the evening, and then we rotated and rolled over and pushed back towards the lows of the day. So had we opened up in today's range or in yesterday's range today, we would have pushed up to that 45.16 and see if there were any initial reactions there. But because we opened above, it became invalid. Nothing really to lean against. And then since, we opened above and then pulled back into the previous day's high, I'm not going to mark yesterday's high at 45.23 because it would be kind of redundant. I'd have to take it out anyway. So let's move on to today. So from yesterday, all we have left is that 45.09 9Y point of control, the low of day, and where the gap starts at 97, right? And then in between the gap, we have 83.75, that 11Y point of control, and then 78.50 where the gap fills. So those would be some downside targets if this market ever decided to roll over again. All right, as for today, let's go ahead and mark today's low of day right here at 21.25. 21.25. We'll mark that as our low of day. Today is the 13th. And then we actually we attempted today to have a wide point of control, and you can see here we had multiple time frames that passed back and forth between this 45, 31, 50 level. Multiple time frames we pushed back and forth through it, creating a relatively wide point of control. It was 8 wide. We didn't get 9 or more wide, so I'm not going to label it, but I will not ignore this area moving forward. You can see that we got 1, 2, 3, 4, 5, 6, 7, 8 time frames here that were developing before this market decided to slowly grind up higher later in the evening. But we will note that we have an afternoon pullback low here. So just for gigs, let's go ahead and label all of my time frames for you guys. So that way you know what I'm talking about. Here is A period. So I'm gonna label all these A through M. There's B period. There is C period. And like on a normal profile, it automatically gets labeled, but because I'm cheap, I do not want to pay $300 a month for a software that automatically does it. I will happily manually type these in. So there's F period, there is G period, there is H, and then I, J, K, A, B, C, D, E. Sing it along with me, guys. Come on. So there is K period. All right, now we're getting into the Three Stooges, right? Curly, Larry, and Moe, the three of the most volatile time frames of the day usually. There's Larry, and then last but not least, here is Moe. So A through M period. Now this one here is after the close. That would be labeled in, but we don't include in our discussion. So Here in H period, you can see right after F period, that would be the first time frame in the afternoon. And that is the first time frame. You can see we pushed up higher, right? In G period, we rolled over. H took out G and F's low. We pulled back and we held that level at 28.75. We didn't get back to the opening, which was positive for buyers, creating an afternoon pullback low. Now, technically, this is a textbook afternoon pullback low due to the set of single prints that are above, and it is only one set, but nonetheless, it is there. So this is a textbook set of single prints, or excuse me, textbook afternoon pullback low. So we're going to label that there at 12 or 45.28.75 afternoon pullback low. So you can see we pulled back to that area, and as soon as we got there, couldn't get back to the opening. Buyers started to rotate this thing back up higher, got back near the high of day, and then we just grinded up into the close. And had you bought that pullback, right, if you had bought anywhere between 28.75 and the opening, anywhere below F's low here at 30, you know, you would have gotten paid pretty nicely, right, as we pushed up to 51 at the high of the day. So you could have gotten anywhere from 15 to 20 points out of that trade on a one lot. You take more than that, you get pretty good pay out of that. So this is why things like this are good to know, especially in the intraday. You can identify it, and then you can take longs as they set up. And if you're shorting this market on the push up, especially when a market is doing what it's doing right now, if you're making money, then kudos to you. But if you're losing, it's because you're not looking at the bigger picture and things like this afternoon pullback low, which signify types of strength. So another nuance would have been that in I period and in J period, we couldn't even pull back into that 31.50 level after pulling back to 28.75. After we pulled back through that level in H period, in I and in J period, we couldn't even get back to 31.50 to create a wider point of control, which means buyers were becoming stronger and more confident after that pullback, right? We shook out the weak longs and then accumulated new ones, especially up here near their highs, and then we just pushed up higher late into the evening. So now we're going to mark our single prints. They start at J and K's high. Now this will be a very, very significant level for me tomorrow. If we pull back into this area, this will be a significant area to watch. So this is where single prints will fill. As if it acts like an intraday gap, and if we pull back into it, then they would get filled. So we have single prints that fill there, and then they start here at 42.50. 42.50. Because M pulled back late in the evening, kind of taking back some of that single print. So these may not hold tomorrow moving forward. All right, so right there we have that little set of single prints, acts as an intraday gap. If you're ignoring this pullback into it, they're technically still open to get filled. Next, we'll mark our price probe, because you can see how M period spiked above L's high, right? L's high was at 46. We pushed up to 51. That is a good enough push above that high for a price probe or a price spike or change attempted to take place. So we'll mark that. Buyers want to open above that and hold above it. However, we close below it doesn't really mean much to me until tomorrow. Buyers want to see us open above that 45, 46 level and then take out today's high here at 45.51.50. And here is the day's high. So there you have it, folks. That is how I mark my charts. That is how you find your destinations in the intraday. How you would take trades based off of it is if we open up tomorrow above 46.50 and hold above it, you would look to take out 51.50. Now, if we open up above, or if we open up above 46.50 and can't take out 51.50, you would look to take it, get below 46.50, rotate down into 42.50, and then fill that set of single prints at 45. At 45, 50, 40, 25, excuse me, numbers, jeez. And then from there, there is a vacuum to the downside down to 28.75. So not much to lean on there. But value keeps on getting pushed up higher. Reminder, value is the blue brackets here, keeps getting pushed up higher and higher. Now, if we take out today's low tomorrow, we'll put ourselves back into a balance, and then you would look to see if we push down into this gap. So that is how I chart on my 30-minute chart. Now let's go ahead and look at our larger time frames. We're only going to look at the weekly and the daily time frame because those are the only two that things have changed since we discussed on Tuesday. So you can see here we are one time framing up on the weekly after we took out our balance high, coming out of an inside week to the upside. So very positive for buyers. We want to keep that trend going. We want to hold above 4,500 going into tomorrow. We'll close out the week on a strong note. One time framing up after being in a balance for 4 weeks, having an inside week up, and then closing above 4,500 would be very positive for buyers. Next target would be that April high on a weekly standpoint at 45.8850. So we only need 48 more points to the upside to get that high, which is very possible. It might be in a grinding fashion. However, we've reached our target at 45.09, so I'm going to take that out. So one time framing up now, meaning we're setting higher highs, higher lows on the weekly. Now let's go ahead and look at our daily time frame. Daily time frame. You can see that we broke out of that weekly balance from a daily standpoint, but let's look at what our daily balance was. So there's our daily balance. What we had initially, we were in a 4-day balance, held that 20-day moving average when we pulled back to it 2 times now, pushed up on CPI data, and this gap here that I'm about to highlight is our next target of interest, right? This area is what we're looking to do. So we're looking to either continue to push up higher, continue to one-time framing. We've been one-time framing up 2 days in a row, meaning we're setting higher highs, higher lows, 2 days in a row now. And we'll be looking to either take out today's high, continue to move up higher from 51.50 on up to 56, and then 45.8850 on up to the upside. If not, then we'd look to take out today's low, put ourselves back into some type of balance initially. Maybe it's a 3-day balance, or we fill the gap and encompass a much larger balance. Eventually, you want to fill this gap, maybe back test that 44.78 area, even the 4,500 level back test a little bit more to see if we really have strong buyers up here, or is this just another case of momentum buyers, short-term traders stepping into the market. Volume below average. Volume over the past several weeks in the past 2 months have been relatively low compared to previous months and weeks. So keep an eye out for that as the summer days continue. See if we get any lower volume coming into next week. With that being said, ladies and gentlemen, I hope this was information very helpful and informative to you guys. If you did find the information useful and you would like to learn more, please continue to follow me. Leave a like down below. Subscribe if you are new, as I'll be trying to keep you guys updated and posting videos on how I do things on a daily basis. When my schedule kind of cools down a little bit, I will be posting videos on my trading, kind of taking live trades and posting those as well. With that being said, ladies and gentlemen, thanks again for all your help and support. For those of you that do watch my videos, I truly appreciate it. If you made it to the end, you're a trooper. We'll catch you in the next one. See ya.